Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that ES actually tagged a high of 21.19.5 and then completely crashed down all the way into 19.99. So a massive sell-off in the overnight session, which takes out a multi-month balance area. So at this point, heading into the open, the sell side is clearly in control, and our focus is going to be more on short setups today. Now, with that being said, we are trading now in a very expanded volatility environment, and that means that we can get some pretty big moves intraday on both sides. It doesn't mean that we are going to be overly aggressive on the shorts, but when we're getting good trade location, then it certainly makes sense to get involved on the short side. And right now we have time frame alignment to the downside, so every zone along the way can actually provide edge and can be a failure spot. Now, given the expanded volatility, you are going to want to expand your stop size. So typically we use 2.5, maximum 3 points for our stop loss. In this environment, that could be expanded to 4 or even 5 point stops. And you can go for 10 to 15 point targets. So the reward to risk is still there. And depending on location, it doesn't mean you always have to use a 4 or 5 point stop, but given the volatility, you don't want to be using overly tight stops because in that scenario, you can quite easily get stopped out, and then the market still goes, 15, 20 points in your favor. So it's better to widen up the stop a little bit, be willing to sit through some volatility and then allow the trade to work out. Now, given the expanded volatility, your targets are going to be bigger as well. So on the upside, our main resistance zone heading into the open is the 2040 to 43 half area and 2045. Ideally, the market holds below that zone, and that would leave the sell side in firm control. But even in the event of a breakout above 2043 half or 2045, we can still get sell side active at 49 half to 52 half, the 56 quarter level, 59 to 62 half, and the higher you go, the higher the odds of sellers stepping in. The market structure has really been damaged here in the overnight session. The market has taken out, like I said, a multi-month balance area, and so far the sell-off has been in the futures market. Now, once the New York Stock Exchange and the regular stock exchanges open, we're going to start to see that effect carry over into the cash markets, and I think we're still going to get these waves of selling off of pretty much every resistance zone on the way up. So even in the event that we get a breakout beyond 43 half or 45, we can still get sellers active at 49 half, 52 half, 59 to 62 half. Those are still very good spots for sell side to be active, but ideally we see the market holding below 2045 today. Now on the downside, the first area of significant support, or at least decent enough support where we can get buyers active, is 16 to 18. And even that is not a major area of support. It's primarily just based on the overnight balance, and it's a spot where the buy side has been active. Now, as far as the long setups go, we are going to have to be extra careful on the long side, and the support zones are going to be better served as targets on shorts rather than entry on long setups. Unless the market really gets exhausted into a support zone, and then even the reaction off of a zone could be 8 to 10 points, depending on how exhausted the market is. But our focus is going to be more on short side, and we are going to have to be very careful on any long setups. On the downside, below 16 to 18, we have some support at 0475 to 07 quarter. Again, not a major area of support, but if the market's exhausted into it, perhaps we get a little bit of a reaction there. After that, 97 to 2000 and the 86 to 89 are pretty decent areas of support where buyers can still be active. So if the market gets exhausted into those zones, those can still be considered as potential long setups depending on just how the market approaches those areas. So again, our focus will be more on the short side, and we are going to have to be more selective on long setups. It doesn't mean that we completely avoid longs. If the market does plunge into 97 to 2000, especially 86, 89, then on the day time frame, those can still be good spots to trade on the long side for a reaction. But we don't want to be aggressive on the long side. But given the time frame alignment, we can be aggressive on the short side. And if that means taking a trade, getting stopped out, and then re-entering at a better spot, that's going to be the strategy. That's going to be the way to go right now. So heading into the open, we're going to be watching to see if the market can hold below 40 to 43 half, 45. If it breaks out above, then we're going to have to gauge the momentum and time a short at one of the zones above. Now this is a highly volatile market and it's going to be a momentum market. So you have to be in tune with the underlying momentum situation. Keep an eye on the NYC tick. Keep an eye on just the underlying momentum in the price action, because we can get pretty decent sized moves in both directions. I'm anticipating a lot of momentum in the market today, and that's just something to be mindful of. The market is probably not going to hold any single zone. It's probably going to go through it, just given the volatility and the range that we're dealing with right now. This is a massive move, 21.19 half all the way down to 19.99, 120 point move here in the overnight session. So we're dealing with a big range, and that's why we have to expand our stops, basically adjust and adapt to a new level of volatility, and be more aggressive on the short side and be more selective on the long side until the market stabilizes a bit and provides us with some more solid market structure that we can lean on. So those are the main ideas heading into the open. Let's see if the sell side can maintain this firm control below 40 to 43 half, below 45. But even in the event that we get a breakout, we can still get failure at one of the resistance zones above. And the higher you go into those resistance areas, the higher the probability of sellers stepping in a more aggressive way. And it would not really take a whole lot for the market to retest 16 to 18, and even the overnight low at 97 to 2000. And then if we really get some major selling and continuation, the 86 to 89 is an area that could cap the downside. So those are the main thoughts heading into the open. Let's just keep our focus, adapt to the expanded volatility. There are going to be good opportunities, but with this expanded volatility, there's also more risk in the market. So that is the current market context and the plan for the day. And let's just see if sellers can really keep it here, and we'll take it from there.